Hi all, good evening and welcome. I'm Ridul Mishra from the corporate communication team, and on behalf of CareEdge, welcome you to today's discussion on agrochemicals, cruising through headwinds. We sincerely appreciate your time in joining us for this webinar. This session will be moderated by Hardik Shah, Director at CareEdge Ratings. Hardik is a qualified chartered accountant and a CFA and has over 17 years of experience with focus on corporate credit ratings. At CareEdge Ratings, he has led various rating teams across diverse sectors. We'll commence the session with a presentation by Surabhi Nahar, who is the Assistant Director at CareEdge Ratings, which will be followed by a discussion with the guest speakers. We'll be having a Q&A session with the audience at the end of the discussion, and participants are requested to please key in the questions in the panel. Now, may I invite Hardik to please introduce the guest speaker and share the key messages for today's webinar. Over to you, Hardik.
Thank you, Mradul, for the quick introduction. We welcome our esteemed guest speakers for today. Our first guest speaker for today is Mr. Kuldeep Jain. Mr. Jain is associated with Hikal Limited as a Chief Financial Officer. He has rich experience of over 32 years in financial operations, strategic planning, accounting, taxation, audit, and many more areas. He has been associated with Hikal Limited for the past 25 years, and Mr. Jain is a qualified chartered accountant. Welcome, Mr. Jain. Our second guest speaker for today is Mr. Vinay Joshi. Mr. Joshi is associated with Dharmaj Crop Guard Limited as a Chief Financial Officer. He has rich experience of over 25 years in various national and multinational companies prior to joining Dharmaj. He is instrumental in strategic growth of the organization and analyzing and keeping an eye on the key industry-specific vitals. Mr. Joshi is a qualified chartered accountant and a company secretary. Welcome, Mr. Joshi. My sincere thanks to our guest speakers for joining this session. Before I begin with the key messages for today's webinar, let me clarify that in this webinar, we have covered the agrochemicals, excluding the fertilizers. So the entire focus of this webinar is towards the last agri input, which is the agrochemicals. These are the key messages from our today's webinar. So as we see, the agrochemical sector has experienced significant demand growth till financial year 21-22, which was mainly driven by factors such as normal monsoon patterns, increased fertilizer subsidy budgets, improved exports, and new opportunities in the form of custom synthesis manufacturing. Indian companies have responded to these favorable prospects by undertaking a substantial capital expenditure, and similar investments are currently underway. Accordingly, the long-term prospects of the sector remains intact, while it has encountered headwinds post half year of FY23. This was primarily due to high channel inventory and a decline in the input prices. These factors have resulted in lower sales forecast as well as lower sales in financial year 22-23, accompanied by a moderation in the operating profitability. So if we see looking ahead, we expect the sales growth to moderate to around 10 to 12% in financial year 23-24, that is the current financial year, with a corresponding pressure on the operating profitability, at least in the near term. Sales growth in the recent past was mainly driven by improving exports, and the share of exports in the overall sales is expected to improve on the back of China Plus One policy adopted by major global economies. Also, we see very good opportunity from the custom synthesis manufacturing segment in the coming period upon shifting manufacturing base from the developed countries to the India. While credit profile of the Indian agrochemical companies in general is expected to remain strong, backed by the strong balance sheets and the significant deleveraging which has happened in the recent past. Post this presentation, we will have a discussion with our guest speakers for today, and then a question and answer session with the audience. With this, I request my colleague Surabhi to start the detailed presentation. Over to you, Surabhi.
Thank you, Hardik. Before we begin the detailed discussion, I would like to take you through the topics that we intend to cover in today's presentation. In today's webinar, we shall start with the distinguished characteristics of global and Indian agrochemical industry, within which we shall discuss consumption pattern across insecticides, herbicides and fungicides, share of herbicides in India's exports, share of India and China in global trade, trend in crop prices and key demand drivers. Then we shall discuss potential impact of El Nino on rainfall distribution in the current year, impact of any potential ban on few pesticides, quarterly performance trend of agrochemical companies for FY23, key growth drivers, near-term headwinds, and key sector monitorables. The figure on the left side of the screen depicts the global consumption pattern of agrochemicals, wherein we can see that herbicides occupy the highest 53% share in aggregate agrochemicals consumption, followed by fungicides at 23% and insecticides at 18%. The figure on the right side of the screen depicts the India's consumption pattern in agrochemicals, wherein unlike global consumption, insecticides and fungicides together occupy 72% share in aggregate chemicals consumption, while herbicides occupy only 13% share. However, over a period of long time, share of herbicides in aggregate agrochemicals consumption is on a rising trend in India. Here we have plotted global trade of agrochemicals. Figure on the left side of the screen shows the share of major countries in global exports. As we can see, China occupies the highest share in global exports and its share has steadily improved over the last 5 years ended CY22. Also, share of India in global exports has improved over the same period. Going forward, it is expected that share of Indian global exports would expand on the back of China plus one sourcing policy adopted by major global economies. Figure on the right side of the screen shows the share of major countries in global imports. Brazil has the highest share in global imports and its share has gone up over a period of last 5 years ended CY22. India stands fourth in terms of its share in global imports. These imports by India are largely critical technicals which are imported and formulations are then exported. With the development of domestic capabilities to manufacture technicals, India's imports are expected to decline going forward. Also, we can see that China is not in this list of countries in global imports, which implies that it has developed adequate in house capabilities for manufacturing agrochemicals through full integration, which provides it an edge over other countries in global trade. The FAO Food Price Index is a measure of the monthly change in international prices of a basket of food commodities. Here we have captured the FAO Cereal Price Index. Historically, it has been observed that when FAO Cereal Price Index is on the rising trend, there is higher consumption of agrochemicals and vice versa. We can see from the figure on the left side of the screen that index for cereal price was on a rising trend since CY19, which has now started declining. Figure on the right side of the screen for the cereal price index is for the last 1 year, wherein we can see a steady decline in the index since May 2022. Accordingly, global demand for agrochemicals is expected to remain subdued in near term. However, as far as domestic demand is concerned, we don't see any major challenges as recently minimum support price for kharif crops has already been enhanced by the government and there has been steady increase in both kharif and rabi crops for the last few years. There are few interesting takeaways from this slide. India's total sales of agrochemicals grew by 16% and 21% in FY21 and FY22 respectively. However, sales growth moderated to 13% in FY23, which is although decent considering an already higher base of FY22. Going forward, we expect sales growth to moderate around 10% to 12% in FY24, and we shall discuss the reasons for moderation in this sales growth in subsequent slides. Interesting takeaway here is that share of exports in India's total sales has been steadily improving from around 38% in FY19 to around 44% in FY23. Going forward, it is expected that share of exports will continue to improve further in the medium term, backed by better export prospects due to China plus one policy adopted by global economies, sizable capex done by Indian companies for going into backward integration, improved prospects from custom synthesis manufacturing, cost competitive manufacturing by Indian companies, and equally heightened environmental concerns in China. In the last slide, we saw the growing share of exports in India's total sales of agrochemicals. From this slide, we can infer that it is the herbicides whose share is improving in India's total export of agrochemicals, and accordingly, herbicides is contributing to India's growing exports of agrochemicals. In the initial slides, we saw that share of herbicides in global consumption stood at 53%, while the same stood at 15% in India. Accordingly, to meet the high global consumption of herbicides, India has started exporting higher quantities of herbicides than insecticides and fungicides. Figure on the left side of the screen is for the exports of agrochemicals by value, wherein over the last 5 years, exports of herbicides has grown by nearly 160%, whereas insecticides has grown by nearly 83% and fungicides has grown by nearly 103%. Figure on the right side of the screen is for the exports of agrochemicals by volume, wherein over the last 5 years, exports of herbicides has grown by nearly 91%, whereas insecticides has grown by nearly 65% and fungicides has grown by only 14%. Accordingly, after looking at both volume and value of exports, it can be inferred that there is highest growth in export of herbicides both in terms of its volume and value. Also, export growth was more driven by value than volume over this period. After discussing the global perspective, let's now focus on the domestic side. These are the key domestic demand drivers of agrochemicals. Area under cultivation has improved over the last 2 years on the back of normal monsoon and increase in MSP for crops along with conducive environment. Fertilizer subsidy is one of the major factors affecting the demand for agrochemicals as agrochemicals are applied in the last leg of sowing of crops. On the back of rise in input costs and gas prices, Government of India has timely and significantly revised upwards the fertilizer subsidy for both urea and NPK fertilizers, which helped the farming sector in having adequate availability of fertilizers at affordable prices. Fertilizer subsidy for last fiscal, that is FY23, stood at an all-time high level of rupees 2,50,000 crore. For FY24, fertilizer subsidy budget stands lower at rupees 1,75,000 crore, mainly on the back of softening of input costs and gas prices. Accordingly, fertilizer subsidy is expected to be largely sufficient for the current fiscal. Success of agrochemicals business also depends a lot on the reach of the companies to their consumers. From the figure on the right side of the screen, we can see that there is steady improvement in number of sale points in the last 3 years ended FY23, which is likely to augur well for domestic demand of agrochemicals in the near to medium term. Rainfall pattern is one of the key determinants for agrochemicals demand in India, so we shall spend some time over this slide. Figure on the top left corner of the slide represents the rainfall pattern. In order to understand the rainfall pattern, first we need to understand long period average. IMD's current prediction is based on the long period average of the last 50 years, which are 1971 to 2020 period, during which India received 87 centimeter of rain recorded from June to September for the entire country on an average. On a pan-India basis, rainfall between 96% and 104% of the long period average is considered to be normal, whereas rainfall between 104% and 110% is considered to be above normal, whereas rainfall lower than 96% is considered to be below normal. Now looking at the graph, we can see that CY19 and CY20 we had above normal monsoon, whereas CY21 and CY22 we had a normal monsoon. Now for CY23, IMD's prediction is for normal monsoon in spite of impact of El Nino in the current year, whereas other weather forecasts have a divergent view of below normal monsoon this year, especially due to El Nino impact. Figure on the top right corner shows the rainfall deviation from long period average during El Nino years. Here we can see that from 1952 till date, generally during El Nino years, rainfall is lower than long period average, barring few exceptional years. Accordingly, it can be inferred that during El Nino years, rainfall is generally lower, and going by that logic, also rainfall could be impacted in CY23. Figure on the bottom left corner shows the water availability in reservoir. Since availability of water reservoir is one good indicator for the prospects of agriculture in case monsoon is delayed. As we can see, water availability in reservoir in most parts of the country stood marginally inferior as on June 1st, 2023 in comparison to the last year. Also, on the back of delay in monsoon in most parts of the country this year, availability of water reservoir has further worsened in the last 20 days or so. Figure on the right bottom corner shows the sowing pattern of Kharif crops. As on June 2nd, 2023, Kharif sowing pattern largely stood in line with last year. However, due to Biparjoy cyclone, delay in monsoon, and potential impact of El Nino, farmers are currently undecisive for sowing of Kharif crops, which could impact the demand for agrochemicals this year. This is a slightly sensitive issue, and there are arguments from both sides. So, let's first discuss the issue on hand. Nearly 3 years ago, in May 2020, by considering the recommendations of Dr. Anupam Verma Committee, the Union Agriculture Ministry proposed to ban 27 pesticides, citing their use is likely to involve risk to human beings and animals. Post representations from various farmer bodies and ministries, after almost 3 years from its original proposal, in February 2023, Government of India, by way of a gazette notification, banned only 3 out of total 27 pesticides which were there in the original list. With this gazette notification, two insecticides and one fungicide, namely dicophol, methomyl, and dinocap, are banned for manufacture, registration, formulation, import, transport, sale, and use in the country. There is no clarity as far as balanced 24 pesticides are concerned, which were also originally proposed to be banned in May 2020. The arguments which are in favor of ban on these pesticides stand like an expert Dr. Anupam Verma committee has suggested to ban these 27 pesticides, citing risk to human beings and animals. Some states like Maharashtra and Kerala have recommended ban on some of these 27 pesticides. Residue of some of these 27 pesticides were frequently found at high levels across the country in vegetables and other food items. 22 of the 27 have been identified as highly hazardous pesticides at an international level. Ban on these 27 pesticides is unlikely to impact the food security and agriculture production in the country. Whereas the arguments against banning these 27 pesticides stand like TP Rajendran Committee was constituted by the Center to study the issue of banning 27 pesticides, which received response from various stakeholders, majority of whom have expressed their concerns over the possible loss to the crops if these pesticides are withdrawn from the market. Farmers are apprehensive of the availability of alternative cost-effective pesticides. Some farmers were of the view that these pesticides caused no adverse health problems. Ministry of Chemicals favored lifting of the ban on the grounds that the pesticides industry had made substantive investments in plant and machinery to manufacture these pesticides, and many of them are micro, small, and medium enterprises. Accordingly, closure of these units due to ban will put the agrochemicals industry in jeopardy. The Food Ministry has said banning pesticides such as malathion and deltamethrin could make food grain storage in the country vulnerable to pests and losses. Department of Commerce has highlighted the adverse impact of banning these pesticides on exports worth around rupees 8,000 crore to rupees 10,000 crore, with an aggregate loss of around rupees 15,000 crore. So arguments are on both sides and have their own rationale. Accordingly, it will be interesting to see if the final stance of the government to ban any further pesticides in the list. As we discussed in the earlier slides, sales growth was very good till FY22, but it moderated in FY23. The moderation mainly happened in H2 FY23, wherein sales declined along with moderation in operating profitability. As we can see, operating profitability, which was at around 15% till H1 FY23, moderated to 12.58% in Q3 FY23 and further to 11.11% in Q4 FY23. The key reasons for moderation in sales growth and consequent impact on operating profitability were high channel inventory, decline in input prices leading to inventory losses, demand slowdown in export markets, along with higher supplies from China. While the long-term prospects of the India's agrochemicals sector remain intact, we expect some headwinds in the near term on the back of all the factors which we discussed in earlier slides. Sales growth is likely to moderate to 10% to 12% in FY24 on the back of decline in both volume and value. Corresponding to decline in sales, operating profitability margin is also expected to moderate to around 11% in FY24. In case there is significant adverse effects of El Nino on the rainfall and or any further ban on few pesticides, the impact could be even severe in FY24. Figure on the left corner depicts the overall gearing and interest coverage for the agrochemicals companies. Over the last 5 years, significant deleveraging has happened. Overall gearing, which used to stand at 1.20 times as on March 31st, 2018, has improved to 0.35 times as on March 31st, 2023, providing enough gearing headroom to the companies for any further capex and or acquisitions. Corresponding to improvement in leverage, interest coverage continues to improve over this period except FY23, wherein interest coverage moderated mainly due to decline in operating profitability along with higher finance cost on the back of elevated interest rate scenario. Further on the right corner, the working capital trend has been depicted. The sector is highly working capital intensive. Elevated gross current assets days and operating cycle have started putting pressure on the operating profitability of the companies from H2 FY23. Considering the elevated gross current assets days as on March 31st, 2023, we could see the pressure on the profitability to continue in H1 FY24 also. Figure on the bottom represents the trend of annual capex by the sector. The sector is highly capital intensive and sizable capex has happened in the last 5 years, whereas sizable capex is lined up for this year too. This capex is largely towards expanding the existing product capacities, expanding distribution network, inorganic acquisitions, backward integration, new product development, and their launch in the market. In case we see pressure on the operating profitability sustaining in H1 FY24, there could be some slowdown in the capex in H2 FY24. As we discussed initially, Indian agrochemicals sector is expected to grow by around 10% to 12% in FY24 due to near-term headwinds, while its long-term growth prospects remain intact. The same is expected basis these growth drivers. First of all, we have a robust domestic demand wherein there is very good scope of import substitution as well as backward integration to reduce dependence on China for raw materials as well as intermediates. China plus one policy adopted by foreign countries is expected to result in significant ramp up of exports from India. In terms of cost structure also, India is one of the low cost manufacturing hubs in the world market. Government's push for Make in India should further aid to improved demand. Sizable part of recently concluded and ongoing capex is either towards backward integration or backed by some firm business commitments for the medium term by global players, reducing the project risk to a large extent. There are sizable agrochemical products which are going off patent in coming 5 years period wherein Indian companies will have a scope to introduce their products in the world market. Ever increasing population would require food security, which would entail steady growth in consumption of agrochemicals, while technology advancement could lead to reduction in cost structures. Like pharma sector, agrochemical sector also has significant potential from CRAMS business, looking at the vast differences in product development costs in India vis-a-vis foreign countries. Having discussed about the key growth drivers for India's agrochemical sector, these are some of the near-term headwinds for the sector as we see it. There is high level of channel inventory wherein destocking has started from H2 FY23 and we expect the same to continue in H1 FY24, putting pressure on sales volume and some price erosion. Higher inventory level amidst falling input costs could lead to inventory losses in the near term. In case there is lower rainfall due to El Nino impact in later part of the year, crops could be impacted, which could have consequent adverse impact on the use of agrochemicals this year. If there are few more products from the list of 27 pesticides which could be banned, domestic sales of agrochemicals could be impacted and small to medium sized agrochemical companies would be impacted to a larger extent compared to large and established players. These are some of the key monitorables which are expected to drive the fortunes of the sector going forward. The three factors on the lower side are related to the supply side. Looking at both the arguments in favor and against the proposal to ban few pesticides, final stance of the government would have an impact on the availability of agrochemicals in the domestic market. Recently, there has been higher supplies by China in the world market with opening up of its economy post-COVID, and if the same continues, it would have an impact on Indian agrochemical companies. There has been great thrust on ESG compliances, and agrochemical being a polluting sector, the companies need to remain ahead of the curve to continue their seamless operations. The companies which would be unable to comply with the ESG norms would find it difficult to sustain and grow in the medium to long term. Balance three factors on the upper side are related to the demand side. There appears a very good potential for India's agrochemical sector to secure large business via custom synthesis manufacturing from global economies. Barring few disturbances in the near term, exports demand is expected to gradually improve on the back of China plus one policy. Climate change would play a big role in the demand for agrochemicals. Excessive rain or drought like conditions would significantly impact the demand for agrochemicals. Thank you. With this, I conclude the presentation here. Over to you, Hardik.
Thank you, Surabhi, for the insightful presentation. So now it's time to seek the views from the experts in the field, our distinguished guest speakers. I'll request our guest speakers to be available now. My first question is to Kuldeep sir. Sir, how do you see the sales growth in the current financial year, especially looking at some moderation which has already happened and which has already started from H2 of FY23 last year? What is your take on the sales side of the agrochemicals, especially in the current financial year, considering all the situations which we have been encountering? Some impact of El Nino rainfall is already delayed. So how do you see current financial year from the agrochemical side?
Thanks, Hardik. First of all, my congratulations to you and your team. I think it was a very good presentation. And more or less, let me just tell you, you have covered all the aspects which is applicable to agchem industries. Coming back to your question, we had a lot of issues with the Indian companies, like we have already covered. There was a COVID issue, and then therefore people kept a lot of inventory. So there's a lot of channel inventory was available in last 6 months. I personally believe that the channel inventory is getting over slowly and probably will have a recovery after the second half of the Q2. So Indian industry, the chemical industry has got a good future going forward. I'm sure we'll come back maybe by Q3 and Q4 as per the as good as it was before the last year.
Right, sir, right. So we have largely a consensus view on the expectations are concerned. So H1 we also expect some impact to still continue because of the channel inventory and delay in the rainfall. Probably H2 is what we also expect some ray of hope going forward.
So let me tell you, Hardik, see, we have really done some study whereby we really got to know that the end consumption has not really gone down.
Right.
It has, still the demand is still there. So those channel inventory has to be really dipped off, which we believe that, by later part of the second quarter, we'll have the, traction coming back.
Yeah. Yes. Yeah. So my next question is to Mr. Joshi. Sir, we saw in the presentation that the share of export has been improving. So it used to be at around 30-35%. Now it is almost 44%. So and there is a lot of noise around China plus one policy. So how do you see the export potential going forward from India side?
Yeah. First of all, thank you very much, Hardik, for inviting on this call. And as Mr. Jain told, that this presentation was so detailed and it covers almost everything. So whatever questions you are raising, it is answering itself. But from my side, just a few things just I want to add. Yeah, we have seen that there is a growth in exports in FY23. It was substantial growth, and we have to look after certain factors why this is increasing, first of all. So, of course, China plus one policy adopted by many global economies is one of the major factor. Another thing, what we are seeing that many European countries mainly and US and other countries, they are under tremendous pressure for arranging the generic products, and they are the largest consumer of these generic products. And mainly European countries, they are facing the challenges of running their plants and operational challenges like fuel and resources. And India being one of the largest generic product producer, so we are capable to fulfill their requirements and we are well placed in that. And so yeah, that is another factor which is going to help in improving the exports. Third point, if we can see, there's a lot of capacity enhancement is going on in India, and many companies are going towards the technical also. And of course, they are looking for the export market so that they can utilize their capacity at optimum level, and also they can liquidate the inventories. So they will not have that pressure of inventories piling up. So these are the major factors which are going to help in improving the exports, which it is my view.
Right, sir. Correct. So following up to that point, I have one question to Kuldeep sir. How do you see the opportunities from the custom synthesis manufacturing? We have seen the success of this model in the pharma side. It has been running successfully, and we have seen tremendous growth from that side. Especially in the agrochemicals, also few companies have gone ahead with the same model and have tested the benefits. So in the long run, how do you see the custom synthesis manufacturing to unfold from the agrochemical side?
Yeah, it's a good question, Hardik. See, the custom synthesis, even though today, if the problem what the agrochemical agchem companies are facing today is primarily in the generic products. If you look at the CDMO or any custom synthesis product, there's not a much channel inventory available. So therefore, the impact is on the own product, which is a generic product. We call in the pharma parlance. Coming back to this generic product, I mean CDMO and this kind of product, they will have a good potentials because everybody is now looking forward for a some reliable sources, which is the India is chosen for that. So in my opinion, these have good bright future going forward. Yeah.
Right. And from the cost side also, there are significant cost differences of developing a molecule in India vis-a-vis developed countries. So that also is in favor, or I would say a business case, especially for the CSM segment is what we hear. So
yeah, definitely. See, basically, India has got a lot of now, you must be well aware this new PLI scheme, which is coming for the agro sector as well, which will really boost the exports, which will boost the industries, and will reduce the cost. So we definitely have a cost competitive advantage already compared to all European and US countries. But with this PLI scheme and then, the economy of scale, will certainly have this advantage.
Right. Mr. Joshi, as we saw in the presentation, the share of herbicides in the global consumption is very high, almost more than 50%. Whereas if we see the India context, it is almost around 15%. So we are largely exporting it rather than a domestic consumption. So do you really see a change in the consumption pattern of herbicides in India, at least in near future or medium term?
Yeah, I think as already mentioned, the herbicide consumption is very high in other countries, and compared to them, we have only 15% consumption. And the major reason being that abundance of land and the lack of labor, that is a major reason why they are using more herbicides. And In India, it's the reverse opposite position. We have a lot of manpower available, and so people, especially in the north part of India, they are using this labor, and so herbicide consumption is very less. Of course, as demand is increasing in foreign countries, and the farming pattern in India is also improving, and the young generation in farming background, and they are looking for more advanced technique, and so that where they can save the cost as well. So herbicide use is going to help them, and they now are diverting their farming techniques, and they have started consuming this herbicide. So we have already seen, like in some of the companies, and we have seen that the consumption in India is already grown from 15% to 20 to 22%, and it is going further. And mostly in southern part of India, their labor cost is high, and so southern states are more, I think they are more aggressive in consuming herbicides compared to north. But yeah, we are seeing there is improvement in consumption of herbicides in India.
Historically, also we saw, though the share is low, but it is gradually improving over a period of time, right?
Yes.
So, Kuldeep sir, one question on the China side. China being a dominant player, large capacities, also full integration across the value chain, and a lot of other benefits also being offered by the government. I'm not sure whether they are available now also or not, but it has a tendency to disrupt the market. And what we hear last quarter, I think there has been higher supplies from China with the opening up of the economy. So how do you see the China factor to play out in the near to medium term?
See, during this COVID, everybody was talking about de-risking the China. And many people thought that, they will be able to cut it completely in 3-4 years. But let me tell you, although all over the world, we can't really eliminate the China. So we'll have to continue depending on the China. Now, how much the dependency we can reduce, that's really depend on the Indian agrochemical industry. Even though if you look at a year back, just say 6 months or 8 months back, and there was a big rumor on this COVID side in China, but they didn't bother about it. They opened up everything and they came up with big bang. So that's why today we are facing the problem. China is dumping the material at any price because the benefit which they are getting in terms of the exchange and the incentive given by the local government is a huge. So therefore, we will have to really remain focused on this, but we'll have to really see it is very difficult to say that we can eliminate China or we can really reduce dependency on China because they have the very basics, fundamental clear among them, and they have a very good intel available. So in my opinion, going forward, at least for a year or two, I don't think so we'll be able to really eliminate China, although the Europeans, Latin countries are really coming forward and they are really having a good traction with Indian companies. But again, the pricing is a very big factor because they have a scale of an economy and they have an incentive. The raw material cost is pretty cheaper there. They have a complete integration. While in case of Indian companies, we have a half materials available in India, half we have to import. So it's all, in my opinion, for another 1 year or 2 years, we'll have to really wait and watch.
Right. Correct. So I have one question which I would like both the panel members to probably answer, which is on the rainfall. So today also we saw the impact of El Nino. IMD has also revised their predictions compared to the initial estimate which they had given. So how do you, so first Mr. Vinay Joshi, if you can answer on this, how do you see the impact of El Nino in current calendar year or the current monsoon? Will it have a significant impact and consequently agrochemicals consumption could also have some impact this year? How do you see?
Yeah, so yeah, we are also closely monitoring the impact of this likely El Nino or this monsoon in current year. And as per the recent IMD's forecast and expectations, so we also believe that of course there it is going to be initial impact on monsoon, and especially in the northwest part of the country mostly. But overall, we don't see a very big negative impact on the consumption of agrochemical. But in the later half of this monsoon period, there will be monsoon which is near to normal. And if we see, I think in one of your slide already mentioned that if we go through the last 8 to 10 years of El Nino years, the monsoons are normal in 5 to 6 times. It was near to normal, not normal, but near to normal. So we don't see major impact on this consumption of agrochemical.
Right. So fingers crossed. So what you said probably should pan out. So, Kuldeep sir, your views on this?
Yeah, I completely agree with Vinay. See, if you look at the southern India, we have the generally better rainfall than the other part of the country. Even some state of the northern India, like Haryana, Punjab, they have their this irrigation channel facility available, and which is large crop oriented states. So I don't think so. There'll be any impact going forward. Although we'll have to wait for monsoon is already delayed. But once this is my personal reading that once monsoon is delayed, then probably we'll have a better rain in the balance period.
Right. So probably what I can summarize is the consumption could be delayed, but we do not see a kind of a backlash which could happen. So sowing, as the Maharashtra government has also asked the farmers to delay the sowing just to be on the safer side. So probably the consumption could be delayed by a quarter or so, but it would be there probably in the current year. Also, I heard that the government has asked the adequate stocking available because probably the demand could come in the accumulation because currently the people are indecisive. So that should also probably help, and the inventory is already there as we initially saw as of year, and general inventory was not an issue, right?
Agree.
Right. So, Kuldeep sir, on the pesticides ban, as we saw, out of 27, 3 has been proposed to be banned. There is no clarity on the balance 24, and the views are from both sides to ban it or not to ban it. But I think the views about not to ban it are more forceful, which has led to ban on only 3 products. So, do you really see any further ban on any of these balance 24 products which were there in the initial list anytime soon?
Yeah. See, those 24 products which is left out for under the list, definitely the government is serious about this, banning those products. But what is happening then, the lot of industries are depending on those products. So essentially, they will buy it from the anywhere other than India, and therefore it is really difficult for any country. Even though you must be hearing a lot of ban happened in Europe, US for many of the product which was supplied by China or the India, but it took them hell of a time to ban those products. If I really tell you the list of those products which is banned in the Europe and US, very few, and therefore probably we'll have to take really some more time to ban those products in India, and we have to really find an alternate products because the people have invested in the capex. People are depending on those kind of products. This is being used as a key RM of this banned product. I don't think so in the near term. I mean, in a year or two, we will be able to do any, maybe barring 1 or 2, which is in the core ban list.
Right, sir. So I'm sure the audience has been anxiously waiting with some questions. So we can have a Q&A session, and I'll request if Surabhi can compile the questions from the audience and can pose it. I'll direct it to either of the panel members. Surabhi, can you pose the questions from the audience side? I think we have a couple of questions. Yeah.
Yeah, we
Sure.
do a couple of questions, and a couple of questions are coming now. Okay, the first question is from Mr. Manoj Kabra. He's asking, over a period of time, Indian companies have migrated from only formulations to manufacturing technicals also. So do you see more penetration towards manufacturing technicals going forward by Indian companies?
Vinay, you want to take it?
Yeah, Vinay, so if you can take it.
So yeah, as many companies, especially the formulation, those companies are only in the formulation, they are migrating to the technical manufacturing. And the obvious reason is that the margins are, of course, better if they move technical. And of course, if they have to compete with the other peers, and the margin is one of the factor, and they have to move to the export market as well to optimal utilization of the capacity. So they have to move to this technical manufacturing facilities. And now I think most of the formulation companies, they are already moved to technical or they are in the process. But I think now looking at the last year performance of this agrochemical industries, we can see some moderate intensity in migration for a year or so. And once the market improve again, we can see more intensity in this capex of this area.
Right.
I will add one more thing. What Vinay said is absolutely right. I agree with him. The export market is primarily looking for the technicals, because many multinational companies are doing formulation themselves. So therefore, we are largely, migrating to the technical. See, export, if you look at export data, technical is lower than the technical. Technical is higher than the formulations. Yeah.
Correct. Probably the margins are also better on the technical side compared to the formulations. That is also enticing the companies to go for technicals. Correct. Yeah.
The other question is from Mr. Rajesh Rastogi. He's asking, post reaching its peak, prices of key input materials for agrochemicals have moderated, leading to some inventory losses for agrochemical companies in FY23. Have these inventory losses fully accounted by end of FY23 due to falling input costs, or we could see some impact to continue in H1 FY24 also?
So I have one similar question from Keshav Mundra. He is saying, do we expect any inventory increase in the inventory levels by end FY24? So somewhat similar to the first question. Yeah. So Kuldeep sir, if you can answer this.
Yeah, sure, definitely. See, as far as the channel inventory clearing is concerned, I think it's all over now. Probably the inventory which is available with the manufacturer now. The channel inventory, in my opinion, is already over. So we will see the good traction by the second half of the Q2. That means we'll have to really see that 1.5 months from now. And then thereafter, as far as the pricing is concerned, pricing is already at the moderate level. And I believe once the demand comes up, we will have a slightly increase in the price, but not like it was 6 months back. Okay. So therefore, in my opinion, we'll be back to the normal which we were a year and a half back.
Yeah. So by end FY24 also, we do not see any inventory again to go up. Probably.
Definitely no. Yeah. See, I tell you, Hardik, there were two primary reasons. Initially, there was a fear of COVID. There was some disruption in the supply chain business. So people kept the inventory. And fortunately, the interest cost and the borrowing was supporting it. Unfortunately, if you look at in last 6 months, we had some 250 basis point interest higher, and all the CFOs, the finance team started crimping on that. The interest cost is going up, and therefore they found it that that where the money is lying. This was probably in the inventories.
Correct.
Therefore, and definitely the inventory was much higher than what it was supposed to be, or what is the SOP each company has.
Right.
And therefore, the first part is that they have to attack, and those products are easily available now. So therefore, this has to be firstly cut off as far as the CFOs are concerned. So then the interest cost comes under the
correct. Yeah, Surabhi. Next question.
The next question is from Mr. Shamal Mehta. he's asking, there has been large size capex done by agrochemical companies in the last 3-4 years. With some moderation in performance in FY23, do you see capex intensity to moderate in coming few years?
Mr. Joshi, if you can
Yes,
answer this.
I
Yeah.
think I covered this point in my last answer, and yeah, so we have seen large capex in recent year, and now, as already mentioned, the FY23 and inventory pressure was there. So this capex intensity will moderate. Of course, if you see other chemical, specialty chemical, there is going to be much more capex. But in agrochemical per se, we can see there will be some moderate intensity for a year or so, and then it may again pick up.
Okay. That will be next question.
The next question is from Karan Mehra. He wants to know, how are Indian agrochemical companies placed to comply with ESG norms?
Yeah, ESG is one thing we are hearing a lot about it now, and all the global consumers are also more focused about the ESG compliances nowadays. All listed companies are required to report the BRSR. So, how do you see the agrochemical companies, especially from the E side, E and S governance? So, anyways, listed companies are following, but the E part is more critical. So, how do you see Indian companies are placed? Yeah, Kuldeep sir, if you can answer this.
Yeah, definitely. The ESG basically has become a mandatory for many listed companies. From the next year, we also have to cover, as you correctly said, the current BRSR reports also. Globally, if you look at the every big companies, big agrochem company, they are looking only the company is as a good supplier or a supplier who has got the good ESG record in India. And to my surprise, I was just reading one report. The Indian agrochem companies or pharma companies, for that matter, they are much ahead than the other companies globally. Barring those, multinational, they are following this kind of concept for many years. So going forward, I mean, ESG is going to be a differentiation factor. Suppose you want to be ahead in the channel, ahead in the business, you have to be fully compliant with ESG. And therefore, I'm sure, the Indian companies are working on all these ESG compliances. Like you said, even governance, G is also an issue here in India, which probably, people are really taking care now.
Right. For paucity of time, we'll take the last question. I think one question is there, I can see from Mit Virani. He is asking, will recession in Europe affect the agrochemicals consumption pattern of India? I don't think, I think he is trying to ask agrochemical sales from India. So recession in Europe, is it going to impact the India's agrochemical sales or the exports? Kuldeep sir, if you can take
Yeah,
this.
sure. See, I tell you, there's no recession as such as far as the Europe is concerned, but definitely there's a fear for the potential recession. And therefore, people are holding a lot of things back. Once everything opens up, probably demand will come back. I don't think so. As I mentioned it before, the end consumption so far has not seen any reduction so far.
Right.
And in the current year, if you look at the 23-24, we have a good traction from the European companies, LATAM companies. I don't think so there's a recession as of now, but yes, there's a fear of potential recession, but it is not impacting any business as of now.
Right. Especially food security is one key aspect in today's time, and wherein the agrochemicals is going to be one of the key inputs. So it cannot probably get impacted for a very long period of time. 1 quarter here and there, it's possible. So I understand. So thank you again to our guest speakers for their insightful views. And it was a really privilege to host you, Mr. Jain and Mr. Joshi.
Thank you very much, Hardik. Thanks the team.
And I'll now hand over to Mradul to give his concluding remarks. Over to you, Mradul.
Thank you, Hardik, and thank you, Surbi, for your presentation and the guest speakers for your insightful views. And thank you to all participants for taking your time out and being a part of this CareEdge webinar. For any further queries, feedback, or suggestion, you're most welcome to write to us in the feedback mail, which will be coming no sooner the webinar ends. Thank you and goodbye for now. I request the tech team to log off, please.